Hello, hello. I know that we are having some technological issues, but I'm not too worried about it. We're going to talk about loans tonight, and I have a few people that message me saying that they're trying to get in, and I'm like, yeah, I'm trying to log in. So if it looks like my computer is clipping, or the World Wide Web is doing the World Wide Web stuff. So let me see if I can't play with some of that stuff a little bit. Actually, let's not do that, because I have no idea what I'm sharing with you right now, which probably isn't that big of a deal. Oh, just my Google Drive. Let's move this back up into place. I'll pull up the finance folder, or I have a PowerPoint I was working on. This is the last week of school for students. I have been getting an onslaught of phone calls and the like, so things have been a little crazy with regards to just everyone going, what do I need to turn in? And I was like, whatever it says is due. So anyway, that being said, my phone is around here somewhere. There it is. And we'll get started on the loan stuff. Okay. It doesn't. I sent to the Google text messaging anybody that was asking for the Zoom, but it looks like we've got Adam. Well, we got Adam. We got this. That's all that matters. Right, Adam? Right, Kathy. Okay. Let me make sure I have not missed any of my recent good evening duty administrator. Okay, no, we're good. We look like it looks like we're totally in it to win it. Steam messaged me. I guess there's a free game out. Okay. Hmm. All right. So let's do this. Oh, chat. Sorry. I'll read chat. I know. You know what? You asked for If you ask, you shall receive. I'm not going to fight it. Look, I have had, I was reviewing some assignments. So for those of you that are watching this in the replay crew, I do appreciate you, but I'm going to barbecue you a little bit. When I post in announcements that we do a Zoom, but it's not mandatory, but you don't even have to come in, you can send me an email and we'll review the information. And then, so some of the college classes, the last assignment for the discussion in that class, because I have the final, so I don't want to give you guys like a real assignment. When I say you, I mean any of the students I'm working with other than Allied and Calibri. They have a lot of assignments in my classes, and they have to, because that's just it's a different, you guys are live lecture and they're not a live lecture, they're independent courses. So, and because they're independent, they have to prove that they've put their hands in the industry, if you will, like the book and stuff. And so the last discussion is, what can I do to better the class? And it's always about 90% of the students are like, we would be so nice if there was a Zoom. And I'm like, there is a Zoom and it's in are you guys not reading the announcement? But then it's like they're independent study because they're doing 100 million things, and I get it, but I'm like, dude, you can go. So almost every single student's like, hey man, just go to the YouTube channel. You can watch the recordings. You can always come in, whether you're past or a present student. That stuff doesn't bother me at all. So anyway, I'm tired. Long day. It's going to be a long night. I got to prep for our class tomorrow. That Tuesday, for those of you that are going to be watching this that started doing the new practice class with regards to SB 1495, the live lecture, I'm still cooking the first pancake because I'm still working in that book for the first time. And I'm like, this book, you know what I mean? I'm just like, the second book's supposed to be fun. This is not fun. But we're done with any of the engagement that's required of everybody. And I want to be nice and say, I totally get when somebody comes in and audits the class and like tries to explain to me how class needs to be run. But if people don't want to engage in the class, I'm not going to fight them on that. That's not my, it's not in my wheelhouse, you know what I mean? And so I'm like, it's okay, we'll just keep going. She's like, no, they have to. And I was like, have to, should have, you know what I mean? Like, it's not like I didn't already say. And then I really felt bad because, Adam, you've got to hook me up, man. If I'm not sharing that you need the new book, in class, I know that I posted a bunch of times, but like an hour in, a couple students are like, "Hey," and I'm like, "Wait a minute, did I not share that you need it?" And I'm like, "Oh my gosh, I think I did. I totally think I did. I'm almost 100% sure I did." So anyway, all of that being said, if you have not received the paper copy of the book yet, and I know Adam's in class, but um, I don't know, they must have just been confused. No, but Adam, if you can follow my line of vision and conversation, chances are you're a multitasker or you're somebody that chases squirrels. I don't know. But I'm just like, please. So I'm grateful that you put in chat, hey, I was on with customer service and they're expediting. Your book should be here by tomorrow, or by to your house by tomorrow or the next day. But even that being said, if you want, I can shoot you the digital copy through email if you were not able to pull it off. And part of the reason I don't like dropping the download into chat is because then it downloads on your phone or it downloads on something else. And if you don't have it on the area where you do your study of the resource, then it's like a hiccup. It's a frustration. And so I was like, okay, so here's where it is in Google. And then when or Kimberly, I think it is, maybe it was Catherine, was like, I can't open them. And I'm like, wait a second, I should have asked her, please refresh your screen because they may not have uploaded properly on her end, but I went through it. I went through Firefox on mine because I'm usually in Chrome. Anyway, like all of that stuff, and then having someone we don't know in the class, like watching the way I'm teaching. I've been teaching almost my whole life. I've been doing real estate almost my whole life, but for whatever reason, I was so anxious, and it being the first book. So hopefully, it didn't really feel like we crashed the plane. But we're still crashing. We're going to be crashing for the next 6 days with this new book. And so there might not be as much imagery as I'd like to have associated with the terminology. Hopefully, we'll be back on track tomorrow by the end of the day. But if not, then I'll just pull the plane up into the sky again and crash again. You know what I mean? Dude, it's such a touchy subject. And look, for anybody that's watching this, we had to do bias training. And I've got green eyes and I had blonde hair. Now I've got like grays of streaked gray hair. And I don't like really do a lot of like anything other than maybe like a platinum wash or whatever, because there's just not enough time in the world for all the stuff that I want to do. So it's strange for me, even though we're Persian, we're Persian Jews and Irish, even though because I'm like the albino version of whatever that would be, maybe. It's hard for me to take on the task of talking to people about implicit and explicit bias because if I trigger anyone because they're like, this white lady's talking to me, I'm like, but I'm not white, even though my skin's white. You know what I mean? Even though I'm white. But I'm just like, how do I Oh my God. Okay, so before we get into the lending of it all, please refresh me on which one of the questions, because I know I kind of lost my mind talking about that pastor that was like, it's okay for people that are um that inappropriately touch other people and children to work in the church. And I'm like, you can't do that if you're licensed by the state, because when we have children, these people can't be within 1,000 miles or 1,000 miles. It should be 1,000 miles. It's 1,000 feet of a school. It's within this and within that. You cannot by law do this. Oh no, it's okay because Jesus forgave him. Dude, Jesus can forgive him all day. He needs to go work with Jesus. You know, and so I was thinking about that because I think the question that you had for the implicit or explicit bias question was associated with the girlfriend being moved into the building, right? Where the landlord, is that the one? I can look it up. I'm like talking to you like I don't have the information in front. I have the information in front of me. Hold on just a second. Um, it was chapter 2. Oh, the one where the lady's name was Ebony. Oh, that one. Sorry. Okay, sorry. I don't mean to get too extreme. Yeah. And the buyer said they didn't want to buy Oh, no, no, the seller was like, "Her name's Ebony," and so for those of you, this is explicit bias by the client, not implicit. They're saying what they're saying. So so let me go back. Actually, let's look at that together and let's talk about that first, okay? I'm going to stop the screen. I'm going to open. Ebony was the buyer. Yeah. Oh, so sorry, Adam. Oh my God. What if I put that Ebony was the seller? Who knows what I did? I was so nervous, and you're like, well, Kathy, don't be nervous. It's just school. Yeah, I know, but it's still like that whole, I get nervous about all that. I just get nervous. It is what it is. All right, let me open the screen. I think it was chapter 2. I mean, I know it's chapter 2. No, that's chapter 3. Chapter 2. And because we were like blowing through it so quickly, because I didn't want her to be in our next class, the poll person. That's sexual discrimination, national origin of housing. You're serving clients' best interests both and abiding by the fair housing. Let's see. Mrs. O'Malley, Ms. O'Malley, that we weren't doing Ms. O'Malley, but I will probably put Raymond find loopholes. You're telling me scenario reporting, broker scenario. Oh, here it is. Okay, let's read through it again. And then we're not having that hyperbolic fighting the timer and all that other stuff. Let's talk about it. Where are you? There's my Zoom. Yeah, absolutely, absolutely. Okay, so let's go through this together. Hello, Brandy. So we're going to talk about this scenario. This is a scenario that we went through. These instructions, this is the bias training certification instructions for the new practice book, right? You are going to either be the real estate agent, and it's going to be a dialogue between two people, the real estate agent, the client, a property management, and the tenant, or the agent and the manager. The very first one right out the gate is, in this scenario, you're the realtor, you're the listing broker for Mr. and Mrs. Murphy. They're your client. So Mr. and Mrs. Murphy are selling their home, and our brokerage, the three of us are working in the same brokerage, and we're working with, we're in a team. Let's say we have a team at the office because we kick butt and take names. Okay. So we have a client named Mr. and Mrs. Murphy, and they've asked us to sell their home. We get 2 offers in. We've received 2 offers from 2 different families, and Mr. and Mrs. Murphy are like, it's not enough. We're going to counter both of those offers. We're going to send back a counter offer saying, we appreciate that you sent in these offers, but we're going to send back a counter offer at full listing price because we know the house is worth it. And Mr. and Mrs. Murphy are like, hey, we want to at least get the listing price because that's really the price point in this area. So let's look at the scenario where you're talking to Mr. and Mrs. Murphy. Mr. and Mrs. Murphy, I'm happy to report that one set of the buyers have actually accepted your counter offer. Mrs. Murphy, that's wonderful. But as I'm reading through this, so I pretend like I'm Mrs. Murphy, but I'm looking through this paper, and I notice here that their first name is Ebony. Is she by any chance Black? And then, of course, you respond, I'm sorry, due to fair housing reasons, I'm not allowed to discuss protected class status. And Mrs. Murphy says, that means she is. In that case, we just as soon find another buyer. Basically, put the property back on the market, right? Yeah, go ahead, Brandy.
When you say that obviously protected class, I mean, you stated obviously in the scenario that the lady is possibly African American, but what if this person in general asks them like, oh, is this person white? Is that still part of the protected class?
Well, we can't identify race. Actually, you
Oh,
like 2 minutes ago, literally, I was saying, here I am. I look like a white lady. We may be Persian, Jew, and Irish, but I look like the
yeah.
Heinz 57 girl. So me having this implicit bias and explicit bias class, teaching people how not to be racist is like a real, I don't know, humorous to me.
Yeah.
But technically speaking, now the terminology, as you can see, it's very clinical because it's in a very uncomfortable conversation to have. Very uncomfortable conversation. So when Mrs. Murphy says, that means she is Black. It's like, no, hold on, dude. Like, I can't tell you. She could be Filipino and just come back from Hawaii. Like, hello, like, not. Ebony is a name. Bubba, I'm on the phone, or I'm not on the phone. What are we doing, guys? I'm on the Zoom. Whoever's at the front door, it's either your dad or it's a criminal that's going to take away the Christmas tree. What do you think it is? They have a key. I have a strong suspicion it's not a criminal. All right, sorry guys. So no matter what the race of the person, in the same way, um, well, Brandy, I know what you look like, but but there's another example of somebody going off as the basis of someone's last name. They're like, you don't want to live in that neighborhood. It's a Jewish neighborhood. Your last name's O'Malley. You probably want to live closer to the Catholic Church. You shouldn't buy in that area. We can't. So it's not just this is very clinical due to the fair housing reasons. I'm not allowed to discuss protected class status, but maybe a better way as an agent we could have said that is, you know what? I don't have that information. I'm your agent. This is the third party. I don't know. And so even though this bias training is very specific to say we can't call out, I think a better way of I think this is a very clinical way of handling it. But to be honest, like if you put in an offer and on a house that I was listing and they're like Diaz, I don't know. She might be Hispanic. And I'm like, I mean, I don't, that could be her marriage. Look, first of all, not my client. So I'm not going to fight whatever anyone's this isn't implicit bias. This isn't a voice inside my head. These people are speaking out their mouth, right? This is explicit bias. And they're sharing with me that they definitely have an issue with a particular nationality or a particular sect of people, right? And so I would, even in the case with your last name, I would first and foremost say, I don't have that information in front of me because they're not my client. You're my client. The other agent is their client. Sorry, the other agent is their, well, they're the other agents. They're the client of the other agent. And so the other agent would have that information, but I don't have that. I don't have any way. And technically speaking, I can't actually, because of the fair housing laws, I can't go into this discussion with you because first and foremost, I don't have the information. And second of all, it's actually against the law. I'm licensed in the state of California, and based on the California fair housing laws and the federal government and the federal fair housing laws, I can't have this type of discussion. And I think that that probably wouldn't have sent Mrs. Murphy into that means she's black or whatever, in this scenario. So it kind of got it up in arms in the class on Tuesday. And so I was like, Adam, let's talk about that one, because Adam's like, wait, what's going on? And I was like, let's just keep moving, because these questions are the new questions that are needed in the practice book for at Senate Bill 1495. And so the second book is completely different than the one that you went through with me. And so learning, not only reading through that, but building the PowerPoints again, and then having all that available to the students, so that, because Adam, you may not know this, I think Brandy does, I can't share with you the PowerPoints that the school has because those are copyright. They're theirs. And so I literally build with students like Brandy and other students that have come from the past and even the present. Like, what do you want me to add? We'll add it, because that way you guys always have that resource at your fingertips. If I use the ones that come with the school and they don't have the pages on them and some other stuff, that makes it a drama for me. I want you to be able to look at what we're looking at and look in the book, because you're the one that has to take the open book exam. I understand now. I thought Mrs. Murphy was the buyer. Ha! Dude, and so then it took me down a rabbit hole, and I was like, Adam, we can't. And so then we changed the scenario. Okay, hold on a second. So let's get to the next step, because Brandy wasn't in class with us. So what should we do? Do we obey and the client, our client, who is Mr. and Mrs. Murphy, and reject Ebony's offer? Do we tell the Murphys that we can no longer represent them? Do we tell the Murphys that they are at risk of fair housing violations? They're not at risk, baby. They pulled up to their car and they started barbecuing and having a s'mores at the fair housing violation barbecue. You know what I mean? Or do we report it to our broker? Well, the broker's the agent. We always report to the broker. That's our first line of defense, right? So that would be the answer. Report the matter to your broker. Now, this actually was a lawsuit that came about in Rhode Island. And I know that you're like, well, that's not California. True. But the Senate Bill 1495 in regards to implicit and explicit bias is federally regulated. It was the federal government that's like, oh, hey, you guys have a lot of disclosures in California, right? Here's a couple more. Oh, and by the way, not only do all of the real estate agents, because of lawsuits like this that are happening across the country, not only do the real estate agents have to go through in addition to their continued education, but anyone that's teaching real estate across the state of California or for the state of California's real estate courses for their prerequisites for the salesperson and the broker, you're going to have to present to the Department of Real Estate in the state of California syllabi associated with those classes and curriculum that proves that you were actually getting an education in this area because of the amount of lawsuits that are prevailing at this time. So Adam, as an example, when we have a lady in our class that's auditing, technically recording, they're always recording the class, but technically auditing the class, and she's the one running the polls, and she's like, everybody has to answer. It's like, okay, they have to answer if they want to pass the class, but they don't have to answer that. It doesn't work that way. And so then I was like, that's why in class, I don't know if you noticed in the very first question, I was like, okay, you guys, are we answering in chat? Are we answering in the poll? Did the poll slide behind the screen you're on now? I was like trying to um, put out some fires with regards to how this works, because I've never had someone come into the class and run half the class with me ever. And then because the polls are not, I'm not running the poll, I can't see who has and who hasn't answered and be like, okay, Bueller, anyone, Bueller, are you out there? We need you to, you know, like I couldn't call the students out that were missing. And so, yeah. Anyway, that being said, this was a lawsuit between Clinton Brown versus Hardwick. And I wanted to make sure, and then that when you ask a question, whoever the you is, the you here, or the you that's watching this recording later on and wants to message me later, you totally can. This implicit and explicit bias is very triggering for people. So that's why in class I was saying, if you feel triggered, I need you to call customer service. If you feel like there's anything I've said that would hinder your ability to move forward, because everybody in the class, you as students, are protected. No matter the nationality, no matter the background, you're protected in the state of California as students from the instructor taking advantage of you. So there's like these other onion layers that I'm having to navigate through that maybe haven't been thought about by all the powers that be. Because the government's always like, this is a great idea for the greater good. And I'm like, California is so regulated. I'm sorry that there's these lawsuits, but notice that all these implicit and explicit bias examples we have, there might be one in California. The rest of them are across the country. And it's like, man, I shove it. But, you know, we have to comply. So the state of California is going to comply in the way that it's going to comply. And one of the things the state of California does is it'll put its hand up and go, look, boo, we understand you as the federal government want to reach in further with your laws, but we have more laws to cover our state so that we can take care of our state. We don't need you walking in every 2 seconds. And so the state of California took on this situation and said, hey, we'll regulate it because we don't need you coming in and taking over our whole entire department, that like they did after the crash of 2000 and 2008. That's why we were covered by the Bureau of real estate, and that means that was national. The federal government walked in and was like, you guys really jacked up California, so we're just going to take over the Department of Real Estate for California, and we're going to hold on to it from, you know, I believe 2008 through 2018, and then they gave it back to us. And it should say that in the book. If it doesn't say it in the book, we'll update. I'll update you through our slides and stuff. So okay, so now that we've got that taken care of, I always get concerned, like when I have students go, wait, who did what? You know, and I'm like, well, they should just have a specialist to teach that class to protect all the instructors from that liability. It seems super stressful. The thing is, I have to teach it in all the classes. Okay, so what did we do at the end of class? Catherine said, is there any other type of submersive like example that you give us that would help us be, because I don't think in the class we're really getting like the real understanding of whether we have a implicit or an explicit bias. And I'm like, well, if you had an explicit bias, you would have said it in class already. And some of you guys have, maybe, maybe not, I don't know. But an implicit bias is that inside knowing. That's why I gave you, I linked in class the bias training with the National Association of Realtors. I was in a meeting with a student this morning. Like my calendar is insane right now trying to get in everybody. And I was in a class, not a, well, it was a Zoom, and the student was sharing with me that they took that bias training through the National Association of Realtors. And when they went to fill out the information to take the state exam, the Department of Real Estate actually asked them, do you have a certificate for bias training? And she happened to take the class because she was like, well, the instructor told me to take it, but it wasn't part of the 3 classes I took. And so she said, I submitted it and they accepted it. And I was like, awesome. And she's like, why is that awesome? I said, because in theory it made sense, but we're still on the beginning stages of how to monitor this continued education or this prerequisite education that's been approved out there. So my thing is, it never hurts to have that because it'll look good on your resume. And let me see if I have it open because we had it. Yeah. And I'll put it in chat. But this is what Catherine was talking about at the end of class. I don't know if Adam, you might have jumped ship, and I get it because like that Tuesday was a lot, and tomorrow's going to be a lot too, at least for me. Just with everything else that's going on. I hope it's not a lot for you guys though. Where's my share screen? Isn't there a share screen here? But we'll get through it. This is supposed to be the fun book. So what kind of certs are we receiving? Is it one of the National Association or just from the school? It'll just be from the school. And it's when I say it's just from the school, you're going to get a certificate that's going to have it's going to have your name on it. It's going to have each of the classes when you register for the class, when you finish the class, and then it's going to have a coding on the certificate. It's going to say like 2 letters and 5 numbers or something like that. And when you go into eLicensing to fill out your application process, to start the process to fill out your application, there you're going to upload each one of those certificates, and it's going to specifically ask you for whatever the code is on the certificate. And when you add the code to the certificate, when you add the code from the certificate to your e-licensing information, it will pop up the school. It will go, oh, it won't say, oh, it's a state website. It doesn't say a lot of things, but it'll pop up, it'll identify that that code is associated with this school. And then you do all of that digitally, or that you type that information in. And then when you get to the end of it, it's going to ask you to upload the documents. It's going to ask you to upload those 3 certificates. But because of the meeting I had today with that particular student, they shared with me that in their e-licensing application process, they were asked if you have a certificate for bias training certification, which is this thing here. And I thought that was really interesting that they were asking for that. And so I was like, well, I am going to add that to the things that I will have share. Hold on a second. For you to review, because I think it's really important that you have this because this is far more immersive. I was going to ask, when we finish principles, can I sign up on the DRE for the e-licensing? Actually, technically, yes, you can. But no, I understood what you meant. Principles and practices, can I sign up for DRE on e-licensing, or do we have to finish the legal? You can start the process, but you technically have to have all 3 certificates. You have to have the principles, the practice, and the legal aspects. But what we can also do is, let me go back to my drive for just a moment, or go to this one because it'll show me the top 3 things, because I was in at your fingertips at one point. I have an e-licensing video that you can definitely check out so you can start the process. It never hurts to start the process, and you can come back. You can save your information, upload it as much as you want to. This is the eLicensing video. Okay. And you can definitely check that out. The thing is, the eLicensing video is on Rumble because Rumble, I guess, doesn't care what your political, I don't know. Something happened with YouTube. I uploaded it twice, and both times I got an alert that said that I was bullying someone. And I'm like, who shut down that video? I don't understand. So I don't know if there's something in there that I'm not supposed to show that's on the other on the inside wall of the Department of Real Estate's e-licensing. It's just whatever, you know? So that's Rumble versus everything else being on the YouTubes. Okay, let's talk about real estate because, or lending, because that was one of the things that you had asked about. Unless there's something else you guys want to ask about, we can go to something else. Actually, I think it would be here. And we'll build this out together, okay? And I'll save finance and stuff. Okay, I'm going to put this in chat because this is the one we're going to be working off in class tonight. And I know it's 7:03. We'll try to get everything done in the next 27 minutes because it's hyper focused to what you got, your needs. It's not, we don't have a preset list of anything. The only thing we have preset is that you had asked for, somebody else had asked about title and the questions we went over, not the questions exactly that we went over last week, but remember how last week you asked about title and the difference between title and deed? And I literally was like, look at last week's, and I was like, I think it's, 30 minutes into it to get that stepped up. If Brandy wants anything, because I'm always here. Brandy, that's facts right there. Adam is always here on Wednesdays. I swear to God. He literally was like, how come nobody comes? I'm like, sometimes they do, sometimes they don't, but the classes are in transition. So do you have any questions?
I forgot you had these, for which I'm glad I remembered because I need them.
Oh my God, totes my goats. Yeah. Yeah, and that's the deep dive. So literally the last week we talked, let me open this up. We talked about, and what I'll do is I will edit on this computer. So whatever I have jacked up on this computer over here, screw that. I'll just edit it on this one as we go through. So financing, one of the things, now it could be wrong. I am wrong a lot. You guys should know this by now. It's Kathyville. Welcome to Kathyville. I'm wrong a lot. Adam asked about real estate financing. I was like, oh, totally. We can totally do that. But then I'm like, oh, I know real estate financing, so I'll skip over stuff because it makes sense to me. And I'm trying not to be that instructor. So is there something specific? Is there a type of loan that's specific that we can talk about? Or do you want to just start right from the beginning and talk about how lending works and all of it? All of it. All right, there's not an echo in the class. All right, let's talk about real estate financing and we'll build it as we go, okay? So the first, I think 27 slides are cooking, and then the ones after that, you guys, I apologize for running out of time on some of this stuff, but this is one of those weeks. Well, but when I say this is one of those weeks, it's always one of those weeks. That's just real estate for you. So we're going to be talking about real estate finance and loans. After reviewing this, I want you to be able to distinguish between promissory notes and security instruments. You guys need to understand the difference between someone promising to pay something, a promissory note, and a security instrument where the lender's like, I hear what you're saying, but we're going to secure the loan to the property so that no matter what comes out of your mouth, at least something's coming out of your pocket, like you're paying us. Differentiate between conventional and government-backed loans. Government-backed loans mean that they are regulated by the government, which means they're going to be your standard run-of-the-mill Mrs. Fields cookie version of a loan. Conventional loans are like, oh, we can give you more money than that. Well, the rate's going to be higher. Oh, you got crap credit? Don't worry about it. We can get you a loan for that. It's going to be a higher interest rate. And so you can see immediately the difference. It's black and white. It's boom and boom. Okay, you've got those that are chillaxed. It's under usually conventional, and then you've got those that are hardwired, and it has to be this way. And that's government-backed loans. And we'll be able to talk through those. I want you to be able to determine the priority of recording. How do people record that they own the property, and what's the priority, what in meaning the dates. It would be on the most recent recording would be the most recent in the stack. Now, as an example, let's say that I sold my property to Adam, and I sold my property to Adam a year ago, December, is it the 13th today? December 13th, okay? 6 months ago, June 13th, he sold it to Brandy. So you would see a deed where the property had been recorded from me to Adam December 13th, 2022. And then, so there's my deed. I bought, let's say I bought it a year prior. So that'd be 2021, right? So there's a deed. I don't know if you guys can see my hands or not. That's going to be in my name, and it's going to be recorded from whoever I bought it from. And then the one that goes in front of that is going to be the one that is the deed that Adam has. And that's going to be December 13th, 2022. And then he sells it to Brandy June 13th, 2023, and hers is going to be on top. So that's what they mean by determining the priority of the recording. Like, it's the way they're stacked. Who's the most recent owner? They would be stacked that way. Also, priority of recording could be associated with when is this going to record, putting it in position to record, putting it in as a priority. So we'll talk about all the differences in the way terms and things are said, characterizing the types of loan programs. You're like, wait a minute, types of loan programs? I thought you said conventional and government-backed loans. True. Within conventional and within government-backed loans, there's other types of loan programs that they have available to you. If you go to get an FHA, it could be one of these. If you go to get a VA because you're a veteran, or you're the spouse of a veteran, whether you're alive or dead, there are VA CalVet and the like. Okay. So, and then also you can do it because Rob Schneider always says it in like every Adam Sandler movie, right? Okay. So let's look, I want to talk to you guys about terms and definitions. A promissory note serves as evidence of a debt. So just like your standard run of the mill, hey, can I borrow, let's say I'm low on cash, and I'm like, hey, Brandy, can I borrow a $5 from you, $5? And she's like, sure. And I'm like, hey, I owe you. I promise I'll pay you back. And she's like, whatever, Kathy, it's $5. Like, buy me a coffee next time. So promissory note serves as the evidence of the debt. A promissory note is actually in writing. So let's say like I've done this to Brandy 50 times in the last year, and I'm like, hey, can I borrow a $5? She's like, dude, seriously, you still have not bought me a cup of coffee. I'm like $100 in on this. Like, okay, I'll write you. I promise to pay you $5. She's like, no, 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 no. You owe me $100, Kathy. So not that Brandy would do that. I'm just using that as an example. So the promissory note is served as evidence of the debt. She's like, look at that, ladies and gentlemen. Kathy actually wrote down the fact that she's been snaking $5 from me every week for the last however long, right? So a promissory note, and this is a lot bigger because basically when it comes to a promissory note serving as the evidence of a debt, a promissory note associated with a mortgage is me, if I'm the buyer, promising to pay the lender, and there would be documented evidence, and that document would be considered a promissory note. Now, there's a thing also called a negotiable instrument, and you're like, are they synonymous? I mean, everything's, I mean, no, but yes. It's a written unconditional order to pay a certain amount of money in at a definite period of time. So I could say, hey, I owe you, let's say Adam's the lender, right? And I'm buying the house for $500,000. I'm promising to pay him $500,000 and back because he helped me buy the house. Now, Adam being the lender, Adam is going to have a negotiable instrument that's like, she owes me $500,000, and she's going to be paying me over the course of the next 30 years, definite time. And this is how much it's going to be a month. So a certain amount of money, and it has to be paid off by the 12th month of the 30th year. So a trust deed is not a negotiable instrument. It creates a lien against the property. So I have a negotiable instrument from Adam. I almost called you Jake. I don't know. Jake from State Farm. He ran through my head, I guess. So Adam, our lender, right, has a negotiable instrument that has the details of the loan itself. Now, what's the trust deed? It's not a negotiable instrument. It creates the lien. He puts a trust deed on the property that says that I owe that to him. I owe that $500,000. That $500,000 on the trust deed just says I owe him the money. The negotiable instrument breaks down how he's going to get paid back. So that's why it says a trust deed is not a negotiable instrument, because the trust deed is just the facts, ma'am. It's $500,000. It's not putting, and then Kathy said that she would, no. The trust deed says this is the debt. The negotiable instrument says, this is how much we're lending you. It says it's the debt too, but this is how the expectation, the agreement we had for you to give me the loan, how I'm going to pay you back over the next 30 years. Okay. So there's a keynote here. While all mortgage loans are promissory notes, not all promissory notes are mortgage notes. And you're like, what does that mean? Well, let's look at those terms. A mortgage loan is a loan secured by secured by a mortgage on real estate. So a mortgage loan, they're going to secure it to the house. A mortgage note is a document that outlines the terms. So a mortgage note is a negotiable instrument where a mortgage loan could be considered. It's not a loan though, but you can kind of see how it's closer to a trust deed, right? Because it's the amount that's secured against the property, but the loan is actually more detailed than that. But the note, a negotiable instrument or a mortgage note can be used synonymously with each other because they are the documents outlining the terms of when the lender will get paid back and how they're going to get it paid back monthly. Now, we are always talking about in the class residential loans because that's my background. But with commercial loans, a mortgage note could say, and we could have a situation where, let's say, we're just going to say that Adam is the residential mortgage lender and Brandy is the commercial mortgage lender, okay? With commercial loans, Brandy's like, hey, on these commercial properties, you don't have to pay us monthly. You can pay us annually, or we can put you in a program where you pay everything in one payment, and that's 2 years from now. And so that's what they mean by mortgage loans it's not just a loan secured by the mortgage on real estate. We're not just discussing residential properties. We're also discussing any type of real property, any type of land. It could be a land loan, it could be a commercial loan, it could be a residential loan. All of these things. That's why when they use all these different terms, they're facilitating an understanding that whatever type of property it is, whatever type of property it's zoned as, the lending associated with it has to be lending that's allowed on that type of zoning. I'm making it more complicated than it needs to be. Brandy being our commercial mortgage lender, her mortgage note is going to be a document that outlines the terms of the mortgage. And let's say that we're getting a commercial loan from her that's only going to be good, that it's only for 5 years. And so she's saying, hey, you know what? You don't have to pay until the 12th month of the 5th year, and it'll be a lump sum of money. That is actually technically a mortgage note because it's outlining the terms, whatever the interest is that's being collected, and why there's only going to be a payment at the end. And you might go, well, that sounds really weird. Actually, loan payments can be anything and everything. And we'll discuss a couple of them as we go. So let's see if we can get the answer to this. A promissory note, is it a security for a trust deed? Is it evidence of a debt? Must it be recorded, or is it collateral for a loan? Do you guys remember what a promissory note is? I promised Brandy, right? I promised Brandy that I would get back to her. Yeah, evidence of the debt. Cool. Yeah, absolutely. A promissory note's evidence of the debt. Perf. Okay. Now, this is where it gets a little Wonka delicious. Oh, speaking of that, we're going to go see Wonka on Friday, right, Adam? Different Adam. Sorry. My Adam, not the Adam in Zoom. Okay. Sorry. I apologize. So when you see the word maker, I always think baker, candlestick maker, but the word maker in real estate, when it comes to lending, is the person borrowing the money. Who borrows the money between the buyer and the seller? The buyer, right? So the buyer is technically the maker. They're the one borrowing the money. Now, they're the ones putting themselves in debt. So they're the maker. I want you guys to know that term. What's a note? A note is a personal obligation of a borrower and a complete contract between a borrower and a lender. Then the holder is the person loaning the money. So you could say in our little Zoom here, Adam is going to be the holder of all the residential mortgage lending if there's anybody that's getting a loan, right? And Brandy is going to be the holder of any of the commercial real estate lending that would be going on. So the holder is the person loaning the money, or the entity. We've got Adam's Mortgage Company, residential mortgage company. We've got Brandy's commercial mortgage lending or commercial lending. So that you both would be considered holders because you're the lender. So a subsequent note holder owner of would be an owner of the note, is a holder in due course. I don't know why I write some of this stuff. That one doesn't make sense to me. Hold on a second. Oh, not in first position. Somebody else that's got some type of holder of the is in a position of lending, but it's not in the first position, so it's subsequent. I don't think you guys are going to be asked that question on the state exam or the open book exam. Well, Brandy for the state exam, Adam for the open book exam. But I'm going to note it because I don't think that I have a good answer for that one. Note to self. Hold on, let me get a new note started. Please clarify subsequent / note holder. Owners of the note is the holder in due course, because due course means presumably future interest and present interest at the same time. Okay. Okay, I got it on my notes. So we'll come back to that one. We'll just hold the phone. We're gonna shelve subsequent note holder, okay? For all of the reasons. So what are interest rates? There's a bunch of interest rates out there that or terms, okay? What would even be an example of that? Like a construction loan. That's what I mean. It's like I'm gonna have to go into it deeper because it doesn't have a I talked to you guys about the different versions of holders that you guys are, but you being hypothetically you're the residential, right? And my reasoning behind going that's not a good, and so I've highlighted it orange to let me know I have to review it. Hold on. Well, let me check one more thing. Slide 6 on finance and stuff. The thing is, if I don't have I don't like skipping over stuff if I don't have the answer. So I'm shelving it because we always first, you guys have been in my classes long enough that you know that I full circle. I'm like, we'll come back to it. We will. But let's talk about interest because that fascinates me that I can't just like pull it out of my hat like I can do with most stuff. Interest rates. Interest rates are important. Why? Because they're on the up and up, right? Interest rates are right around 8%. Hopefully, and I saw an article that was like, oh, interest rates are going to come down. I'm like, because it's a political voting year, people. Of course, they're going to come down like 0.5% maybe, or something else, but they might pop back up and go up a lot higher after whoever gets voted in as president, if we don't just keep the president we have. But a lot of times you'll find that in political years where there's voting, that whatever's happening politically will either cause inflation to be worse or it'll be better. So let's just see where we go with this, right? A great example of that is after Obama got into office, gas prices went crazy. And I can't, I don't know how you explain that. It's like, and then everyone's like, it's his fault. I'm like, no, unless he owns Chevron, unless he owns 76 in Dubai and not Dubai, sorry, the Middle East. I don't think it's really his fault. But anyway, so we're going to be inflation. We're going to have either be deflation with the rates. The rates are either going to come down or they're going to skyrocket. We'll see where they go. But let's talk about the different type of interest rates that are out there. We've got simple interest. That's the interest charged on most real estate loans. So simple interest, your standard run-of-the-mill 30-year conventional. It's just simple. You're just going to pay it, right? Nominal or named rate is the interest rate stated on the note. And what do they mean by nominal? They'll say, you'll see on the note that it's like not that it's like, it will say the interest rate is 8%. And the reason they call it the nominal rate is that's what you're being charged to get the loan, but that's not the compound interest that comes with it over the 30 years. As an example, when you sell a property to somebody, and they get a loan on it, they're going to get a piece of paper that says truth in lending. And the truth in lending is going to say $500,000 house or $2 million house, 8% interest rate. Let's go with the 2 million because this one's easier numbers for me. They bought the house for $2 million. Their interest rate is 8%. But in 30 years, they will have paid 3 times the amount because the nominal rate may be 8%, but the amount that's been incurred has been collecting interest over the 30 years will actually make someone pay 6 million for that $2 million house if they keep going and paying that off over the course of 30 years versus paying it off quicker. That's why you'll hear people say things, you'll see YouTube videos, it's like, pay your house off in 10 years and do this and do that. And you're like, I want to pay my house off in 10 years. And it's like, yeah, you do, because then you're not paying the interest that's going to be incurred over the next 20 years, which will make you pay 3 times for it. You will technically have paid for your house in exact money that you borrowed if you pay in the first 10 years. And you'll hear lending institutions say things like the first 7 to 10 years when you buy a property is basically interest only. It doesn't, the balance of what you owe never goes down. Okay, so nominal or the named rate. They're naming the rate on it saying, you got 8%, dude, you're doing so good. You're like, 8%? I'm gonna be paying 6 million if I don't hustle and get this thing paid off before the 30th year or before the you're basically starting over the whole entire process in year 11 and then in year 21. So you will have paid for the house 3 times. So what's the effective interest rate? So the rate the borrower is actually paying. So nominal and effective. We talked about nominal, let's talk about effective. So commonly called the annual percentage rate. The effective interest rate takes into account the compounding period. So basically paying the house 3 times over, right? And thus is more accurate. It's a more accurate measurement of the interest charges. So the effective interest rate is actually calculating out what you're going to be paying through the process of having a balance, and everyone's going to have a balance. You know what I mean? The effective rate, because it affects you. Nominal is like, yeah, that's your rate. It's whatevs, right? But the effective rate is you're going to be paying 3 times what you borrowed on this house if you pay it off in 30 years. Now, in the state of California, if your house is worth 2 million today, in 30 years, the house is probably going to be worth 15, right? Or it might not be worth that much, but it's going to be worth more than what you pay. It's going to be worth more than 6. Unless we have a zombie apocalypse and then come stay with us, we'll be fine. But I mean, allegedly, but we'll, so effective rate makes sense. But in the state of California, we have a better return on our properties than in most states. So people a lot of times will just go, it's just it doesn't matter. It does affect me, but like I'm gonna have to pay rent if I rent. So whatever. Like people look at it that way, and that's okay. You can totally look at it that way. All right, what's a fixed interest rate? Well, the interest rate and term do not change over the life of the loan. A lot of times people go, okay, a fixed interest rate means it's fixed to that interest rate, right? Yeah, and you can also call that simple interest because interest charged on most real estate loans is simple. A fixed interest rate, 30-year fixed, it's simple. It makes sense. You got a 30-year loan at 8%, and it's for a $2 million house. And I know you're like, you can't do 100% financing. We're just going to say that you can right now, and we'll break down how financing works in a few slides from now. All right. We'll come back to that. You guys can look at the questions later. So, and why? Because what I know you guys got this. We're just informally having the conversation. If there's a further question, we'll go over it. But limits on interest rates is a big deal. We need to be aware that there's no usury. And you're like, Kathy, was there before? Yes. That's why they have to detail it now. And they're like, you guys can't do this anymore. And what they mean by that is people were doing this before, so we're not going to allow anybody to do this now. Usury is charging an interest that is unreasonably high or beyond the legal limit. In the state of California, actually, and across the nation, there are high or heavy regulations on how this works. We can't just lend and go, hey, it's going to cost you this much money. There has to be a cap or a ceiling on what can be charged. So usury, I like the image, the practice of lending money at an exorbitant or very high interest rate. We can't legally do that. Now, this has happened in the past. There are particular types of loan programs out there where people went to court and said, I feel like the lending institution did commit usury because there were other options available, but they told us this was the option that we should go with. And what they mean by that is they gave them a higher interest rate than they had to go with. And do I have any examples of that? Yeah, the crash of 2007, 2008. The reason why so many people walked away and there was that massive bubble and the crash, is because so many people were put into these homes at an interest rate that they could afford, but because that interest rate wasn't fixed or and it wasn't simple, in 2 years, the interest rate doubled or the interest rate went slightly higher and they could barely afford the mortgage that they were put into. And so they went to court and were like, hey man, you guys, or they basically told the bank, you can pound sand. We don't care. We're not, we'll just go rent the house down the street because there's a house in this exact same neighborhood at the mortgage payment we had before, and we'll just go back and be renters and we'll go and move into that property before you foreclose on us so that our credit isn't crap. And we'll just rent until our credit looks better again, and then maybe we'll buy again, or maybe we'll never buy. And so there was, and it would be different if only one or two people did that, but it was a national disaster. So that lets you know that lenders probably did have some form of usury associated with how people were getting into these properties and probably did give them too high of an interest rate. Oh, one more thing. So in that, we as real estate agents, now if you want to go into lending, you can totally do that. Okay. But you have to be a licensed agent first and then go through the prerequisites with the NMLS, which is the National Mortgage Loan, NMLS something or other. It's not something or other, but I can't think of what it's called right now. So you'll have to do your prerequisites and take that national exam so that you pass that. And then you take that information, just like you're doing with your state exam information, and you submit it to the Department of Real Estate. And then they will approve that you're going to do lending and real estate. They'll give you what's called they give you a type of endorsement. They endorse you. They're approving you to do lending, and they're going to watch you like a hawk because the crash happened because people were doing real estate and lending and making lots of money off of people, and it wasn't regulated. It was regulated. Let me clarify something. It was regulated, but it wasn't regulated enough, and so many people took advantage of the way it was regulated. All right. And it was usury. So another type of instrument is, oh, wait a second. Oh yeah. So we talked about another type of instrument. Let's talk about repayment plans. How do people pay back their mortgage? Well, they usually pay monthly, right? The terms of a note include the interest, the repayment plan, and then default, meaning if something happens, there's going to be a problem if you don't pay. So if, let's say as an example, we're going to do small numbers right now. How are we doing on time? We'll go a little bit longer. Okay, guys. Let's say that you have $1,000 mortgage payment and you're having a tough month. And so, let's put it this way. I'm having a bad month. I'm having a bad mortgage month. Like my bills are just astronomical. Okay. And so I write my mortgage payment to Adams Lending, residential lending company, right? Because I said we'd use you as the example as the lending company. So I write you a check, but I can't write you $1,000 check. I can only write you a $900 check. And so I write the check to Adams residential lending company. And then I get a letter back from his company that says, we can't accept less than the payment. You have defaulted on the loan. You have paid less than the minimum required. That $1,000, we had the note, we have the interest, we have the payment plan, we have all of that information in our mortgage coupon to you, and we see that you wrote us a check for $900. Please get back to us with $1,000. We're not going to cash this $900 check or deposit this $900 check because it is less than. You have now defaulted on the loan. You've defaulted on the promise. You're giving us less than what the minimum was required of you. And I'm like, but it's only $100, you guys. You should be totally good with it. And the thing is, the way lending institutions look at it is, it's not that $900 isn't a lot of money, but it's 100 less than what was promised. And it's very black and white with how that works. They aren't going to go, well, I can tell it's the holidays and they probably bought a big tree. Lenders don't look at stuff like that. Lenders are like, you shouldn't have bought the tree. You shouldn't have fed the dog. You should have paid the mortgage. So you made that promise to them before you fed the dog. You made the promise to do the loan before you fed the dog. You made the promise to do the loan before you spent all the money and didn't send it in. So there's a method to this process that lenders put people through, and there's lots of disclosures associated with this, so that when someone defaults and they get a letter from the lending institution and they're like, I just don't understand why they're so mad. They're not mad. It's just business. So examples of repayment. So let's say that it's a single payment, end of the loan. We have Brandy's commercial lending that goes, hey, with our commercial deals, if the loan is for less than 5 years, we don't even ask you to pay us back until the 5th year. Now, does that mean if we borrow $500,000 from her that we only owe her $500,000? Nay. Nay, my good man. The loan program that her company is offering us is going to include the interest and not just the repayment plan, but what the cost is going to be in 5 years because of the $500,000 we borrowed initially. That $500 is going to be there, and then the rate that they quoted, and then the interest, right, associated with those 5 years is going to be combined with the $500,000 that we owe her, and that's the amount of money that we are going to have to pay her back in 5 years. So that would be a single payment or an end of the loan term. If there's interest only or a straight note or a term loan, that means the principal never moves. So in interest only, I think that one makes probably the most sense. Interest only makes it's usually like a second mortgage is probably the best way to explain it. So let's say you have a second mortgage for $100,000 and it's going to be $1,000 a month because of the interest on carrying that $100,000 loan. That's the cost incurred to have that balance there, or to have that open. Interest only means that you're just paying them for the fact that they gave you $100,000. You're not paying it off. Interest only means it's just going into the pocket of the lender, right? Principal never moves. Now, the partially amortized with the balloon payment means that there's a big last payment. So in the 30th year, the 12th month, and that's what I love about this image, is if you've got your standard loan on this side, you can see when you're being paid, but in that balloon payment at the very end, there's a lot more that's going to be expected of you. You're going to have to come in with a chunk of change. That's what I mean by balloon payment. If your payment has been $4,000 a month for the first 30 years and 11 months, and there's still a balance of $200,000 owing against that property, the last mortgage payment is going to be ballooned to $200,000. It's whatever's left on the balance. So a lot of times these are called partially amortized because the payment that's going to the lender, part of it goes in the pocket of the lender, and then part of it goes to pay the balance off. And then we've got our fully amortized payments, which are fixed payments and they're level for life. And that's your standard run of the mill 30-year fixed, 8%, same payment for all 30 years for every single month. Do you guys have any questions about these different type of payment options? Most people are only going to see the fully amortized payments. Most of our clients are only going to do 30-year fixed. Some of them will do a partially amortized, but some of these other ones are very specific to a specific type of zone property, or they're specific to like a short term. You might want to flip a property, so you're going to get a single payment. You might go to Brandy and go, hey, you do commercial lending, you do hard money too. A lot of times commercial lending does hard money loans as well, or strange loans. And what I mean by that is very unique to them, and they're called short-term loans for a reason. So she'll be like, "Oh yeah, totally. What do you need?" Well, we're going to flip the property in 6 months. We need $200,000 right now. And she's like, I can get that to you in like 3 weeks, but the interest rate's going to be this and this and this. And they're like, what about the payment? And in the negotiation of the loan, she can go, oh, well, you can just pay it all off when you sell the house in one single payment. Give us the loan. We'll just have an invoice in escrow to pay off the debt. I just want to go over all of it again. It's just a lot of information. I know, Adam. And the thing is, like, it's already 7:37, so I do apologize for it being so late. Um, if it's a lot of information already, then why don't we step away and try to reassess and get refreshed? Because Brandy, I'm sure, has work. I'm not questioning that, and prepping for the state exam, and you have 6 hours with me tomorrow. Which I do apologize ahead of time for, because there's going to be so much information. But again, we did go, okay, so just so you both know, this whole PowerPoint, or most of this PowerPoint, is associated with the very first class, not the very first class, the very first book that we went over. Does any of this stuff sound familiar? Or is it all like, holy crap, Kathy, it feels like I'm hearing all this stuff for the first time? And it's okay if it feels like it's the first time. I got a call from, who did I get a call from? Our text message from a student that just took the exam, and they're like, "You never said anything to us about escrow." And I was like, "I think escrow is the one thing I joke about. Like, oh, well, it's all in it. If you don't hyper focus on escrow, it's just the neutral third party, or don't do the." And I was, there's so much information that I go over with you. Each book, well, the books now are going to be under 200 pages, but can you imagine what these classes would be like with over 300 pages? I initially had the books that were over 600 pages, and then they went to over 300 pages, and now you guys have them for 200 or whatever. But it's familiar, just need the repetition, because I know I'll miss stuff. No, and the thing is, the fact that you're engaging as much as you possibly can is power. So please be encouraged on that one. Um, Are there any questions about any of the other, about anything? Because we'll just continue with lending. We'll just do lending 2.0 next week, unless there's something else in addition, and then we'll add that to the mix. But we'll just keep powering through this so that we can finish it. And then also any of the stuff, like we'll continue with implicit and explicit bias questions that you may have, because that is going to help you on the state exam. Oh, that's what I wanted to say, Brandy. Contact, and I can text you customer service with the school, because I want you to go back into CompuCram and study in CompuCram, because CompuCram is going to have everything basically has been updated with the school, with all of the new implicit and explicit bias stuff. And because that is so hyper focused right now, I guarantee the state of California exam is going to be asking you questions about Senate Bill 1495. And and the consumer protection that's associated with that, on the way we deal with people. And I'm not saying you don't know how to do that. What I'm trying to share with you is, I know that CompuCram in the school dashboard, for those of you that don't know what I'm talking about, Calabria and Allied Schools have a student dashboard that has this really cool program available to their students. If yours has expired, or if the window closes, we've been having some technology issues. And so all you've got to do is get on the phone with customer service. I'll send you the phone number if there's a problem, but I want you to go in, because I believe that that's been refreshed, and you'll be able to see what the questions may be like on the state exam, so that you're prepped and ready for taking the state exam. And that same thing goes with you, Adam. I want you to be able to do that as well. It's just that you're in book 2, and Brandy's prepping for the state exam. So I'm like trying to maneuver the class so that it works for both of you guys. But so just as a side note, Brandy has a group text message with her class, and Adam has a Discord with his class. Please reach out to your class members and say, hey guys, if there's anything that you want to talk about on the Wednesday nights, Kathy, whether you are a past or a present student, I don't care how long ago it was that you've been a student, these are always here for you, because we need good people in this industry, and there aren't necessarily a lot of there's some wonderful people, but the more people that are informed and aware will make my class doesn't talk except San Francisco. That's kind of true. I think we had a couple of people like that in Brandy's class as well, where you're like, stop. No, just kidding. But anyway, that being said, we'll talk about it more tomorrow, and let them know that we kind of deep dove some of that implicit bias stuff. And but yeah, it's always available. And Brandy, whatever the group chat, if they're feeling like they need to come in, and there's never, and you guys know how I am. You don't have to have your camera on. You don't even have to talk. You can just put it in chat. I'm totally down with that. So that being said, it is 7:42. Is there anything else we can go over this evening? That's at the tip of your tongue or the top of your brain. And if not, we'll call it a day, and I will be getting ready. I have to submit some grades tonight for my other classes, and I'm trying to think what else. Prep for tomorrow's class, because not all my PowerPoints are up to date. I'm trying to figure out how many of the chapters are the same as the last book, and I'm finding that none of them are, and I'm like, no, but that's okay. We'll make it. We'll make it work. You know what I mean? All right. Have a great night. Well, if you need anything, I am a text message away. I am an email away. And Brandy, we can chat on not Monday, Friday. Let's try to chat on Friday. If not sooner, or text me and let's see if we can't do like a texting back and forth on some different things, and just a lot going on. And I'm sure you've got a lot going on too. So anyway, that being said, be blessed and encouraged. But we'll talk. We'll talk very soon. All right. Okay. I will see you all very soon. Be blessed, be encouraged. For those of you that are a part of the replay crew, thank you. Thank you for coming in. Please put a message in chat. I will upload this tonight on this computer, on this computer, and try to get this up on the YouTubes this evening as soon as possible. All righty, McKnighty. All right. I will see you soon. Be blessed, be encouraged. Oh, did you want to say hello? I mean, did you want to say goodbye? Her does want to say goodbye. Oh, we tried to trim. It didn't work very well. I know. We need to take you to go get your toes did, huh? Yeah. Is it time to eat dinner? You waiting for me? Okay. Okay. All right. We'll see you soon. Be blessed and encouraged.